Good morning, traders. Welcome to the Bookmap channel. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. And boy, oh boy, are they a-moving. What an interesting weekend it was for the markets. Now, those of you that are members of the Piratetraders Brigade, you will remember on Friday what I was talking about, which was at the open Friday, I was talking about the fact that, there's two ways for a market to balance off momentum or excess, right? When a market is moving very harshly in one direction nonstop, it can't go straight in one direction forever. At some point, it has to balance off that momentum. It can do that either with time by going sideways at a higher price for however long it takes to continue the momentum to the upside, or it can balance with price, which is where it pulls back with the price, and that gives stronger hand, longer term traders a chance to buy the dip and get it at discount. Those are the two ways the market can balance off momentum. And I was talking about on Friday the fact that there was no way on earth this market was going to balance off the momentum with time, that we were going to have to get a pullback with price because we left so much weakness behind on the way up. Okay. So I'm leaving this here this morning so you guys can see all these different weak references. As of Friday, we had left behind. We had multiple gaps that had been unfilled by regular trading hours, and we had just tons of weak reference. And then we had on Thursday an extremely poor low. So could I have predicted that Trump was going to come out and throw tariffs on, or threaten to throw tariffs on Brazil? Of course not, right? I could not have predicted that that was going to happen. Could I have predicted that China was going to release this new AI that was going to have everyone freaked out because it can operate, with much less compute power? No, I could not. But I could understand technically the position that the market was in, so that at least I wouldn't be surprised when I open up my chart this morning and I see we had this massive pullback. Now, I'm surprised by how big it was. I'm surprised by how fast it was. I'm surprised that it happened over the weekend rather than waiting and happening this morning, which is what would normally take place. I'm surprised by those elements, but not by the pullback in price. That was expected. So then you say, okay, Charles, I hear you. Trump, said something. The market had this emotional reaction. Everything turned out to be okay. Are we now going to turn around today and just completely retrace this sell-off and head straight back up to all-time highs? Well, the fact is, I just don't know. Okay? Let's start today off with our top-down approach, where we take a look at the monthly, weekly, and then daily candles, and we'll see if we can find any insights from there. Okay, so first off, on a monthly basis, the market has momentum to the upside, but we have made a lower low, meaning that that momentum is likely over. At least for now, we're likely going to go sideways on a monthly time basis. So that's not really helpful. Let's go to the weekly. Same thing, just made a lower low for this week already, which means the momentum up on the weekly, the last week had momentum up. That is over, and we are probably going to continue to bounce. Now, when I look at this chart on a weekly time frame, I can see a very clear balance area right here. Okay? Market tried to go higher, couldn't. Tried to go lower, couldn't. Tried to go higher, couldn't. What is likely to come next? A move to the downside. So on a weekly time frame, this is actually bearish, and it increases the odds of momentum down. Okay, great. Let's zoom in and take a look at the daily. So when we look at the daily, we see that we had a ton of momentum last week. Look at all that momentum straight up from the lows, nonstop, up, 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 up. This might just be our way of balancing off that momentum. If that is the case, it could turn around and go higher today. Or we could spend the next few weeks going sideways inside this range. So either V-shaped to come straight back up to all-time highs, or we go sideways for a while. Okay, so now let's zoom in and look at the market profile chart to say, okay, we have an idea of what could happen, which is basically anything. Could go up, down, or sideways. How will we know what's happening? in real time? Well, the first things that stand out to me are these cumulative nodes that you see above and below price. You can see a very large cumulative node above price right here and a very large cumulative node below price down here. To me, this is what will give us the indication, both intraday today and to carry forward for the rest of the week, what to expect. If we get into either one of these nodes, they are likely to act as support and resistance as they have been over the weekend. Okay. So as we push up towards 60-20, we're likely to keep getting smacked down in there and have to really fight and poke our way through there if we're going to get up higher. So first things first, I'm expecting it to act as resistance and stop the market from going higher. If it does not, and the market is able to pass through it, I would assume it's going to become support on the way back down, and I would be bullish for a V-shaped recovery. So that is if today we poke through this resistance, getting above, we'll say 60-30, and then turning it into support, that is bullish for a V-shaped recovery right back up to all-time highs. If it acts as resistance and we can't get above it, that is the market telling me we're not ready for a bounce yet. We either need to spend time down here at lower prices, or we need another sell-off. We need another dip. So it'd be bearish if this holds as resistance today. Okay. And then we got the support down here. And it's the same exact thing. I would expect the market to press down into it and find support. So I wouldn't expect the market to just instantly sell off to the overnight low. I'd expect a lot of bounces in here. If it can hold the support, that remains bullish to head up and test the resistance. If it breaks, then that is bearish, and we are looking to test the overnight low. Now, the overnight low this weekend is very important. Okay, that is down here at 59.48. Why is it important? Because they re-entered an old gap. So at the moment the market opens, let's say the market were to open right now, we still got 20 minutes, so the price could move around in that time. But let's say the market opened right now, we have already repaired this gap that was unfilled, and we've repaired this gap that was unfilled. But if the market opens today and it trades all the way down to the overnight low, that is the market's way of telling you it needs to fill that last unfilled gap, which is all the way back down to 59.10. Now, do I think we're necessarily going to make a move to 59.10 today? No, of course not. But if we get through this node right here around 59.80 and we get new selling down there, we are at the very least targeting a move to the overnight low and then monitoring for continuation because it could head all the way down and fill that gap. So out of all three scenarios, I think the most likely scenario today is chop, basically in between these nodes that I just pointed out. Okay? I think the market will probably just go sideways inside there. If it does that for, let's say, 4 or 5 hours, and then it suddenly breaks, it spikes one way or another, we can trust the momentum on the break. Okay? If we get above this node and get new buying, it is bullish to retrace price. If we get below this node and get new selling, it is bearish to go fill the gap. So I would say the move up is the least likely today. The sideways move is the most likely, and the middle probability is the continuation lower. Okay. And we'll just have to take it one tick at a time. I love to be able to make predictions before the market opens with high probability of exactly where the market's going to go and exactly what the market's going to do. But the truth is that is just not available to us today. Why? Because everyone that's going to be trading this morning is trading out of emotion. They are all chasing the move that happened over the weekend. So they are either going to be exiting positions that they're already in. Maybe they got short because they felt like the market was overbought last week and they want to take profits on those shorts when the market opens this morning. Or maybe they were long and they need to exit those longs at a loss. Maybe they are flat and they're like, this is a great dip to buy. And so they're looking to buy this dip. Or maybe they're flat and they're like, this market is about to crash and burn. The world is coming to an end. And so they want to get short. The point is, no matter who those participants are, buyers exiting at a loss, sellers exiting at a gain, buyers entering for a new trade because they think this thing is going to retrace, or sellers entering for a new trade because they think this is just the beginning of a larger pullback. All of those participants are emotional. They all feel a need to do something this morning. And that leads to very choppy, very unpredictable markets. In particular, it leads to markets that reverse very quickly. V-shapes on both sides, where it looks like it's about to break lower. And then as soon as it turns around and starts coming back up, you squeeze all those, emotional traders that went short, and then it does the other way. And it goes back and forth and back and forth and back and forth. So I am expecting chop this morning. I'm feeling no need to enter a trade right away. Now, I know you're thinking, but Charles, there's a gap. Why don't you just go for a gap fill trade? Gap fill is not in play today. This is a very different market under very different circumstances. So nobody is taking a gap fill trade purely to fill the gap today. It is about how they react bigger picture to this change in market sentiment. Are they bullish and they use this as an opportunity to buy the dip, or are they bearish and looking to take the market lower? That is what the chop this morning will decide. So I feel no reason to force a trade in the first hour of the day. Okay. Waiting for either one of these two large nodes that we talked about to break, or waiting for the end of the first hour, the initial balance, to see which way the market gets momentum this morning. Those are good insights to carry forward for the rest of the day. Anything else is a gamble, because anything can happen this morning. And so you got to keep that in mind. Do you really want to gamble? Even if the market goes 20 points up and comes back down 30 points and then turns around and goes up 25 points and it's just bouncing in this giant range, do you really want to participate if you have no clue which way it's going to break? Food for thought. All right, we got 15 minutes till the market opens. Let me know if you have any questions. I'm going to go in and clean up this chart in the meantime. Get rid of all these weak references that no longer matter because we repaired them all the minute we open. I will also be switching to 4-tick increments this morning. If you are not a market profile person, you don't know what that means, don't worry about it. If you are, you know exactly what I'm talking about. All right, good morning to Nor Auto Trading. Welcome, welcome. DNK is here. Good morning to you. RK says, deep seek dive. Yeah, so I actually think the sell-off is more because of the tariffs than the deep seek, but that is definitely part of it too. For those of you that aren't following the story, essentially, this Chinese company has come out with an AI that works as good as ChatGPT, but on significantly less powerful significantly less powerful computers and chips. And the reason that's a big deal is because, the the world is obsessed with AI because they know AI is going to be, the main catalyst of economic markets over the next, however many years, 200 years or whatever. AI is going to sort of take over the show. And whoever has the best AI is always going to have an advantage. So if you're thinking about investing your money, a great place to invest your money is going to be whoever is going to be on the cutting edge of AI, because they are going to outperform their competitors. And it was thought that America had an advantage in the world of AI because we had better hardware. We could build better chips that could compute, with more power, and that our computing power would make us more powerful than the rest of the world. And so China coming out with an AI that functions just as good on significantly less compute basically takes this entire thesis that a lot of investing over the last few years has been about, this thesis that America has an advantage and American companies have an advantage because we have the ability to have more compute than anyone else in the world. And we are building more, warehouses and data centers every day than anyone else. Well, that's all out the window. And what's crazy to people is it's just like that. It's like something that a month ago, nobody would have predicted was even possible. There's no way, you could have a AI that functions just as well on less compute. You know what I mean? But then suddenly it's a reality out of nowhere. A thing that no one predicted becomes a reality. And that sort of shock gets a lot of people nervous, especially investors, right? Who are looking at a 10-year horizon for their money. So yeah, I do think most of this sell-off was because of the tariff news. But I definitely don't think that DeepSeek helped at all. That's got a lot of people nervous about owning companies like, Microsoft. So I'm sure you'll see some selling in those stocks today. Good morning to Billy K. Mr. 36. Good morning to you. Kevin is here. Jay in the house. He says we got some action at the big casino. SC is with us. Good morning to you. Jason in the house. He says, let's smash that like for the awesome play-by-play from the captain. I concur, Jason. Let's get those likes. So we got 103 people hanging out right now, and we have, drum roll, 21 likes. Thanks, guys. 1 out of 5 of you think I'm okay. Appreciate you. If we can get those rookie numbers up, I really would appreciate it. Good morning to XYZ. Welcome. Sum is here. He says, what is your exact trading strategy? What is your exact strategy? How are you going to trade it? I don't have an exact strategy. On a morning like this, as I said, the greatest strategy I have is sitting on my fucking hands and doing nothing. That is the best thing you can do. If you know all the market participants that are entering trades for the first hour of today are going to be just emotional, right? They're either, as we discussed, they're getting squeezed out of longs, they're taking profits on shorts, or they're trying to enter new trades thinking this is the dip I got to buy, or, oh my God, it's going to keep going. I got to sell to catch a piece of this on the way down. That's 4 different ideas to be going long or short, and all of them are emotional. So if you know that, if you know for sure the trade this morning is going to be very, very emotional, the last thing you want to do is force trades, because the second you do is right when the market's going to reverse. And when it reverses, it's going to reverse hard, and it's going to reverse fast, and it's going to rip your face off. Okay. So for me, my game plan this morning is to just watch the market move, at least for the first few minutes, and figure out what is happening. How are these people reacting? Are the sellers piling on? Are we getting new sellers, or are they exiting? Are the buyers piling on, or are they exiting? Who's in charge of the market? And as I said, my main focus is going to be this node right here. Okay. Which is between, say, 20 and 30, 60, 20 and 60, 30. And this node down here, which is between, say, 80 and 95. Okay. 59.80 and 59.95. That's where we'll find out what comes next. In between those two, we could just chop and chop and chop and chop. And I get that it's a big range, but we could just chop and chop and chop and chop and chop. And no one's really in charge. It could break either way. But if we get above that first node and find support, we can get very, very bullish. If we get below that lower node and we get resistance, we can get very, very bearish. Okay. If we fail at either one of those levels, we know we're going to get more chop. But as long as we're in between them, it's a guess. And I don't have a trade plan for guesses. I only have trade plans for the market generated information is telling me I have an edge, that I have a higher probability of one thing happening than another. Then I enter trades. Jay says, hit the like button or walk the plank. Arr. 7 minutes till market open. Yo Kuzna, good morning to you. Alyssa in the house, ahoy. 7 Mile Reach is here. He says it's open source. That's the other crazy thing. Yeah, about the new Chinese AI. Anyone can just use it. Help yourself. It's free to the world. Open source. DNK says NVIDIA was down 500 billion. That can't be right. 500 billion? That's so much money. Yeah, I guess you're right. Man, they're at 3.5 trillion. So yeah, they could lose 500 billion. They could lose $500 billion pretty easy. Gnarly. Oh boy, oh boy, boy. Yeah, see, NVIDIA, scary where it's opening right now. So NVIDIA has been balancing for the better part of 6 months or so in a range, and they're now going to open way below that range. So that increases the odds that even if they get a push higher, even if they can work their way back up to say 130, they're probably going to get resistance and get rejected back down. It's beginning to look a little bearish for the tech stocks. But again, this is what I love about trading. This is what I love about markets. It's all emotion, right? So somewhere out there right now, there's somebody panic selling NVIDIA. And there is also somebody with hands of diamond, the strongest hands that exist. That's like, dude, NVIDIA's on sale and they're buying it this morning. And we're going to get to watch that tug of war and figure out which side is going to win. Will, good morning to you. Pellegrino, good morning to you. Paris, welcome, welcome. He says, hi, why 69.20, that level for you? So one thing that I pay a lot of attention to, particularly when I'm kind of uncertain about what the market could do, is I look at this section over here on the left side of the screen where you see the orange lines. That is the cumulative volume. So that's basically taking all the volume from all the times we've traded at this particular price level in the past. So currently right now at 59.98. This represents all the volume that has ever traded at this level, okay? At least over the last few years. So when I feel I'm uncertain about what the market is doing, the first thing I do is I look for large nodes of liquidity in this cumulative area. Where are there levels that stick out, that pop out to me as being bigger than the neighboring areas, okay? And you can very simply see, let me switch colors here. You can very simply see that this is a large node and this is a large node. Does that make sense? So I don't know what's going to happen when we get there. We could come to this upper one and blow right through it and keep going higher. It could act as resistance all day long and we go nowhere. We could poke into it once and it smacks the market straight down. I don't know what's going to happen when we get there, but I know that's where I'm looking to find out, right? That's where things get interesting because that's where it's no longer gambling. I'm no longer guessing if the market's going to go up, down, or sideways. That's where I'm getting market-generated information of what's happening. Now, why is it the large cumulative nodes? Don't ask me, okay? It's just people like to do business where they've done business in the past. So if there's somebody who wants to short the market this morning, they're not going to go short at the opening bell. They're going to look for somewhere to put their orders in resistance. This is where they're going to be looking, right? Same thing with support down here. If they're looking to buy the market this morning, they're not going to buy the second the opening bell rings. They're going to let it come down into support. So that's why I say I can trust the information that I get inside those nodes if there is support or resistance. And if that support or resistance breaks, that's really reliable. That's what we call market generated information. So that's why I'm watching those levels. And if you're in the brigade and you're hanging out for the rest of the day, I will talk about them in real time as we're getting there and say, this is the level where we should get sellers. Let's look at the ticks. And then we'll watch what happens with the ticks at that moment. And if they get smacked down, I guarantee you price will follow, and so on and so forth. This is how we make sense of a random market where there's uncertainty. Tom Gunn in the house. He says they can afford it. I assume talking about NVIDIA losing $500 billion. That's so much money. Like it's so much money. It's crazy. Abu says, what do I think about NQ? So NQ is going to be doing the exact same thing as the ES. I would guess it's going to be a little weaker than the ES today because, you know, the news is about tech stocks. But yeah, it's in exactly the same position. All right, the market is open. Let's see what happens. As far as the NQ is concerned, that large node above, which will act the same as the ES, is this one around 21,190. That's going to be your resistance level above. So it'll probably take quite a bit of poking to get through there. If they can get through, you can get bullish to start to retrace price. A target to the upside would be something like 21,457 or 21,500, that area. That is if they can get through this node, this large node over here around 21, we'll call it 21,200, and turn that into support. To the downside, they have this poor low very nearby. So I would say if we do get resistance there, I would look for the market to come down and repair this poor low at 29.68. And then I'd be seeing if that's enough to cause the market to reverse back up. Any new selling below 29.68 is bearish to test the overnight low down at 27.70. Okay. So I think both markets are set up to do some chopping and some grinding this morning, and we will take it one tick at a time. Okay, we're pushing into that resistance on the ES. So let's see what happens. One thing I'm going to be keeping a close eye on today on the Bookmap is the stops. Seeing how many stops do we take out on the way up or down? Do we leave icebergs behind? That means we're coming back, and we'll figure out what happens from there. Okay, so this is the upper end of that resistance where we would expect the market to get smacked back down. Anytime we see this many orders at one exact level, we know that there's a bot playing a game. There's no reason why one level would have 11,000 contracts and just 2 levels below only 2,000. And again, where did that happen? Where did this huge volume node of whatever's going on here happen? Right where that cumulative node was. Exactly. They love to do business where they've done business in the past. Okay, so now we broke above it. This is our first bullish signal for the day. Does this mean we should be going long? Absolutely not. You don't buy the high. But we can expect a little short covering, little boop, boop, boop. If we get it and the market comes back down to 60.27, we can look for it to become support. If we get both those things, short covering, boop, 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 and it comes down and finds support, then we can start looking to go long. Until then, we should assume it's just a fake out to chop right back down. I make note of the fact that we have a weak low, which increases the odds the market's coming back down, and we have an unfinished iceberg at the low. So both of those are a reason for the market to come back down. So this is our first bullish signal, but not enough to get long yet. We need more information. Ooh, they just disappeared that iceberg. No, they didn't. Never mind. Some says, can you explain the left orange table? Is that market profile and what does it mean? Yeah, so that's the cumulative volume profile. That's showing you all the volume that's traded at that particular price level in the past compared to all the other price levels. So the bigger it is, the more it sticks out, the more volume compared to the other relative areas. And again, as I already discussed this morning, where are we having tug of war right now? Where are we fighting the fight to decide who's going to win, buyers or sellers? Right at that large cumulative node. If the buyers can win here, if we can get some short covering, come back down, turn it into support, then great. We just move higher from here. If we cannot do that, if we fail, if we come back down and we pull all the way back through the opening price, well, then the same thing that's happening right now up here will happen down here at this other cumulative node. And that's kind of the way the market works. It gets to one of these important levels. It plays tug of war. Who's going to win? Who's going to win? Who's going to win? Who's going to win? And then one side or the other gets squeezed. And then it goes to the next level. Boop or boop. Currently at this moment, while it is looking bullish, I don't trust it. I think they want to dip back for that opening price again. So I'm waiting to see if they can get a move higher and then come back down and turn 60.24 into support. I don't believe they've done that yet. And so you say to me, well, Charles, what if it instantly goes another 20 points higher right now and you're not in a trade because you wanted to wait for a dip and a confirmation of support? Well, then, oh, well, I let it go. I don't care. I miss trades all the time. And the good news is there's always another trade, and that's totally fine. Whereas getting into a trade too early and then getting your face ripped off when it instantly turns around and heads back for the opening price, that's painful. And so that pain should be avoided, in my humble opinion. Okay, so the first piece of information I'm getting, there's a lot of day traders shorting this market right now. These stops that we keep seeing get taken out here, these are day trader stops. These are not, longer time frame. So we got day traders shorting the market right now and getting squeezed, and shorting and getting squeezed, and shorting and getting squeezed. That's not real new buying. So we definitely need to wait for price to come back down and get real new buying to trust this move up. All right, so this is what we've been waiting for. Moment of truth. Can they hold it? The idea is very simple here. If the buyers can hold this support right here around 24.25, they can start to take control of the market, meaning they can start squeezing all the sellers from the overnight. Bit by bit, move by move, the market just kind of keeps melting higher. Okay? If it cannot hold this support, then the market is going to head back for the opening price. So I ask, once again, can they hold it? Albert says, what is your time frame for the volume profile? So This always confuses people. It doesn't really matter. I just, however much time I have to. So I think right now on this chart, my settings are only going back 120 days. Okay. But you load as much as you need to. So if I were to go to a daily chart, right now, I only need to go back a couple of months worth of data because we've only been up here for a few months. So this is the data I want to put together to figure out how much volume we brought in at various different levels. If the market were to have a massive sell-off, well, then I would need a lot more data, right? If it were to have an even bigger sell-off, I would need even more data. So it's just however far back do I have to go to be able to see, how many contracts traded hands at each level in the past. Generally, about a year's worth of data is plenty. And that's, of course, dependent on your data provider and the quality of the software you use and stuff like that. Sometimes if you try to compress too much volume data together, it causes your computer to start to have glitches and stuff. So just figure out what works. Figure out what works for you. The long and the short of it is, whatever levels the market did the most business in the past, those are levels where it will do business again in the future. So low volume nodes, the market will pass through very quickly. Larger nodes will act as support or resistance. It will be a place where the market has to play tug of war. Right now, we're finding out, does this large node act as support? So far it is. So far. But then we start to ask ourselves, okay, so we can go long because we're getting support in here and that increases the odds the market is going to go higher. But what if it doesn't? What if it just starts to pull down, right? Well, then we know because we can see all this volume right here. We see these big red candles. We know there are more buyers than sellers because the market didn't come down. If more people had gotten short right there, the market would have gone down. And instead it keeps going up and coming down and going up and coming down. So that's buyers stepping in here. Okay. So that support level gives us a place to look for a long if we want to get long for the momentum up. It also gives us a place to look for a change in the market if it can't hold. Because if the market comes down through this support now, right, and this level breaks, guess what's going to happen to everybody who just went long? 17,000 contracts at each of these levels. That's a lot of people going long. All those people start to get squeezed. They start to exit. And then boop, 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 boop. You're right back at the opening price very quickly. So as of now, the market is bullish because this is holding support, but it only remains bullish as long as that support holds. Because as soon as it breaks, you liquidate this market right back to the opening price. So I say again, can they hold it? So we got rid of one of the magnets to the downside. We had two magnets pulling on price. The first was the weak reference. The second was the iceberg. Well, they just turned off that iceberg down there at the low. So now there is less of a magnet pulling price down and the support is holding. So this is bullish to see. Good morning to Nap. Welcome. Trevor in the house. Willie T is here. Oh boy, says we got some house numbers at 10 a.m. We'll look out for some volatility there. Some says, can I show my icebergs and stop settings? Sure. Here's the iceberg settings. Screen grab it quick. And then here is the stop settings. There's not that I think there's anything special about these settings. It's just how I have it. Costa says, what's your average RRR? I'm not sure what you mean by RRR. Risk, reward return? Is that what you're asking? Yeah. So the way that I trade is that there's like a process that I go through, right? The process is, first I have to understand what the market is doing. Then I have to see a good opportunity to enter a trade. Then I have to be able to enter the trade with less risk than potential reward, and so on and so forth. So I never lose more than 2% on a trade because I adjust my position size depending on how big, I need my risk to be in terms of stops. I adjust my position size, so I'm never risking more than 2%. And my reward is always at least double what I risk. So to be profitable, I only have to be right about 40% of the time. And I'm right way more than that. Oh, he's saying, what's your average R? I get it. Okay. That one went right over my head. Albert says, I've been looking at session level daily volume profile overlaid with 2-week volume profile, but we'll add the longer time frame market profile for context. Yes. So for me, all I look at is the cumulative, which is like all of it combined together, which is the screen over here on the left. And then intraday today, I look at the daily volume, which is, from the beginning of the session to whenever, where did the volume trade? And then also this one in the middle is the 30-minute volume as well. So just the volume within this last 30 minutes. Obviously right now we're in the first 30 minutes, so it's the same. But as the day progresses, these will look very different from one another. And that to me tends to be all I need to do. I don't ever, combine different stuff and all of that. I just keep it real simple. Cumulative volume, daily volume, 30-minute volume. Alexander says, what about the 121 gap? Do we consider it filled? Yes. So the way I think about weak references, any reference that needs to be repaired, whether it's weak, it's poor, it's a gap, it's single prints, whatever. Any weak reference that needs to be repaired, once you open on the other side of it, it's instantly repaired. Not until the opening bell. So if the overnight does it, it's not, but, yeah, this is looking bullish, guys. They want to poke to the upside. So I remain bullish as long as we stay above 60.25. If the market comes crashing back through that, particularly if it does it right at 10 a.m., then we're coming back for the opening price. So you can pretty much use this node as like a look above and fail level. If they can't stay above it now, they're going to fail. They're going to pull back down. But yes, so yeah, that gap right there, it was literally, this was that gap. When we opened right here, it's as if we passed through it in the regular trading hours. So yeah, it's repaired. Now let's say the overnight had come down here and then come back up and we had opened like right where we are right now, then we'd still have that gap because we didn't cross through it during the regular trading hours. So for example, this poor low at 59.69, that is still poor. Even though the overnight crossed through it, because we didn't do it in the regular trading hours, that still remains poor. But all the other weakness we had left behind, that all got cleaned up the second we opened down here. All right, so I'm going to mark some resistance levels for this move to the upside. These areas are based on cumulative volume, where I think are the most likely spots for the market to flip and reverse and come back down to test the support once again. Okay, back to the first potential support, 60.30. Looks like we finally cleaned up all the icebergs above. So now the question is, can we bring in new buyers right here at 30 for the next move to the upside? Or do we need to head back down to 25 again? XYZ says, what do you do if a trade's risk-reward ratio is less than 2? I don't trade it. Yeah, it's as simple as that. I just don't trade it. Or I reassess trading it. So something I figured out in the early days was a lot of times I'd pick like a couple potential, say, support levels to buy the market, right? So I'd be saying, you know, this is a support level that I could buy right here. This is a support level and this is a support level, right? And I just buy like the very first one, like, because I just wanted to get in the trade so freaking bad. But then my reward would end up being, you know, the same as my risk or less. And so I just learned it is better to grab the lowest possible support where I'm taking on less risk than my potential reward, right? And so what is the downside to doing this? Sometimes you miss trades, right? Sometimes you just don't get the dip down to that lowest potential support, that best possible entry. And if I can control my emotions, if I can be okay with missing the trade, let's just say that doesn't have an emotional effect on me, it doesn't get me frustrated, then I will win so much more money over a long term, over a period of weeks, months, years trading by doing that, by always waiting for it to dip to the lowest possible entry. Generally speaking, you'll always get a chance to buy support where your potential target to take profits is further than your stop, right? Like the market will always give you those chances. And so if you only take those trades, you'll perform much better over time. The hard part is, and the thing that traders struggle with is missing trades, seeing that the market's going up, knowing they were bullish, but they're not in the long because it didn't quite come down to the entry they wanted. And then that gets them frustrated. So then they start buying the high, right? Then they start chasing price, and that never works out for anybody. So yeah, if it doesn't match that risk reward, I just wait. And those end up being my best trades. The ones where I'm forced to wait because of my rules, those are the ones where I make the best trades. So it might not feel good emotionally, but it feels good to my P&L. Rando says Monday gap downs are usually met with buyers. I said this morning. I don't think you should treat today as a gap day. I wouldn't think about it like that. So what today is all about is how does the market react to this massive change? Whereas on a normal gap day, people will take a trade just to fill the gap. Like they don't need any bigger thinking than that. They're like, it's a gap down, I'm going long. And they take longs to fill that gap. Whether they take them at the market open, they take them on the first dip the market does, they take them on the way up as the market is starting to fill the gap. The point is people are going long just to fill the gap. I would say in today's market specifically, that's happening much less than normal. I would say people that are going long today are either people that were short that are taking profits, or people that are trying to buy the dip, right? They're looking for that longer move. Yeah. So we'll take it one tick at a time. I do not think we're going to get a gap fill today. Not at all. Okay. So the market just created what we call a poor high. It means we were not able to finish the auction to the upside. So even though the market is going down, it is actually bullish that we left behind that poor high because it increases the odds that we'll find support and come back for that high. So again, I just want to emphasize this cumulative node right here around 25. It's been acting as support. As long as that continues to hold, we should assume the market wants to continue to go higher today. But if it breaks, it is a liquidation point. It is a point where you could squeeze all the buyers so far this morning at once by coming back through these levels. So take that into context with your trading. If you're going to long, don't buy the highs, wait for dips. And if you get taken out or, use tight stops so that if you get taken out, you don't lose a lot because this thing could drop very, very quickly right back to the opening price. Okay. For now, I would say the buyers are in control. They are trying to take the market higher, and we'll just see how long they can remain in control, how long they can keep buying dips, and where they take profits. That is it for me here today on the Bookmap stream. I appreciate you guys so much. If you are interested in hanging out for the rest of the day, or you just want to hang out every morning and hear me talk like this for the first hour, head on over to Piratetraders.io/join and join the brigade. There's a thing above me, a banner that tells you where to go. It's $20 a month. You can sign up for free. You get your first 3 days for free. So if you're thinking about it, you might as well just sign up and see what it's like. And yeah, you get this that I'm doing now every day. I hope to see you guys in the brigade. Thank you very much. If you have not smashed that thumbs up button, now is the time to give the pirate a like. Thank you very much. We'll see you next Monday right here on the Bookmap channel. Ba-da-ba-ba-da.